Good morning, everyone. Welcome to today's Phillip Securities Research Morning Call. Today we have a few stock counter updates. For update, we have Alphabet and China Aviation Oil. For results, we have Salesforce, Nvidia. For Phillip on the ground, we have Sunny Environmental. And for initiation, we have Thakral. We also proceed on to the technical analysis for S&P 500, several counters, for example, VOO, IEF, GLDM, and so on and so forth. We also have the technical analysis for Thai SDR monthly and ETF monthly, and we will end off the session with the SG Weekly Week 23. Kindly note that Paul is on leave today, so if you have any questions directed specifically to him, please type in the you may reach him at the Phillip community app. This is our usual disclaimer slide. Kindly note that information presented is solely for educational purposes and should not be considered as financial advice. Yep, so now I'll hand over the time to Serena. Thanks.
Thank you, Iqbal. Good morning, everyone. I'll actually start with the Alphabet updates first. So the company emphasized that they will invest around $75 billion in AI-related infrastructure, especially in servers and data center. The capex in first quarter actually grew 43% year-on-year. So we do expect this rise in capex will have a short-term impact on valuation because of higher depreciation expenses. But the management actually plan to offset it by moderating the pace of compensation growth and improving the utilization of technical infrastructure. Next, the cloud revenue actually surged 28% year-on-year in the first quarter with an impressive margin of 17.8%, up from 9.4% because of the improvement of productivity and larger scale. Alphabet actually do see a demand for clouds remain strong, but they do expect a pressure on the revenue growth because of the supply constraint. So keep our cloud revenue unchanged with expected growth rate of 35% because we do expect the supply condition is going to be improved towards the end of 2025. The search and YouTube app growth was low from 12%, but remained resilient at 10% year-on-year, driven by financials and retails. The company do project a slowdown in ads business moving forward, partly because of two reasons. The first one is because of the strong ads demand from insurance in financial year 24. This is one of the most expensive vertical in Google Ads. And the second one is because of tariffs impact, since Shein and Temu are considered as a significant revenue contributor to the business segment, and they do reduce some of their advertising budget because of the tariffs. For the outlook, we do believe that an AI-driven business model will remain a key contributor to Google's long-term profitability, alongside with a better margin because of their effort in the cost optimization. Regarding to the tariffs, Google actually provide limited guidance on it, but they do acknowledge that there might be a potential headwinds to the advertising business, especially from APAC-based retailer. But on a longer-term basis, we do believe the overall impact will be modest because currently the Google Ad business strategy is shifting towards efficiency with their AI innovation. So for these particular stocks, we have maintain a buy recommendation with a higher target price of $250, but we do reduce the revenue forecast by 2% because of the short-term impact on the ad business. And next, I'll move on with the Salesforce result, which was released on 28th of May. So the first quarter result was actually in line with our expectation. The revenue and PATMI was at the 23% of our FY2 year estimate. So the first quarter revenue grew 8.8% year-on-year to 9.83 billion. It's slightly above a Salesforce guidance of 9.76 billion. The growth was mainly driven by 8% growth in subscription and support, especially from small and medium clients, and 14% growth in platform, driven by a new contract in Tableau and MuleSoft. And the next one is because of the strong growth in CRPO, the current remaining performance obligation. It grew 12% year-on-year to 29.6 billion. The management actually do highlight that the annual recurring revenue of Data Cloud and Agentforce has currently more than doubled to $1 billion US. Next, the Salesforce operating margin continued to improve to 19.8% compared to 18.7% in the first quarter of 2025. It was driven by the operation outperformance and also the headcount reduction. But moving forward, the company plan to reduce hiring in customer service and expand the sales team by 22% in FY26. We do expect a wider operating margin of 21.6%, mainly due to the investment in sales-related human capital. We do think that it could be beneficial in winning a larger deal so that the operation will be outperformance. Regarding to the outlook, Salesforce actually increased their full year guidance by 1% to 41.3 billion and expect a 10.1 billion revenue in the second quarter with a revenue growth of 9%. They maintain the subscription and support revenue growth at 9% because of the solid momentum in data cloud and Agentforce. They do expect a 10% growth in CRPO in the second quarter and increase the dividend payment by 4% to 42 cents per share. The company also announced the acquisition of Informatica the day before the earnings calls for $8 billion. Is currently subject to regulatory approval. Salesforce actually confirmed that it will be financed through cash and new debts without any share dilution. They also do expect to close the deal officially in fiscal year 2027. So for Salesforce, we actually upgrade to a buy recommendation from Accumulate because on the ongoing margin expansion, and we do see a resilient demand from its core products such as cloud and Agentforce. So we increased the target price to $364 from $305, but we reduced slightly of the estimate revenue by 1% to 41.1 billion. Thanks. I'll pass the time to Iqbal.
Thanks, Serena. Yep. I'll present on Nvidia's first quarter 26 results. Our report title is Blackwell's Growth Offset Impact from China. Yeah, so I'll explain why. So for the first Q26 results, their revenue exceeded our expectations. The revenue is within our expectations, but their PATMI performed below our expectations because they took $4.5 billion inventory hit to their gross profits. Yeah, so because of the US export restrictions, Nvidia cannot sell their modified H20 chips to China, so they have to take on this $4.5 billion inventory charge. And this actually affected their gross margins as well as the PATMI. As for the positive for Nvidia, the Blackwell RAM is still ongoing. For example, they unveiled the new NVL72 rack, which connects 72 Blackwell chips and enables 30 times performance from the previous 8 GPU Hopper. Yeah, so previously for the Hopper chips itself, only 8 of these Hopper chips can be connected into one rack. However, now for this Blackwell chip, they can connect 72. So that is a 9 times increase in number. And furthermore, for each Blackwell chip itself, it has a 3 times performance compared to Hopper. Yeah, so that adds up to about 30 times performance for this new Blackwell chip. And that's why there's a strong demand for this AI chip from the hyperscalers. Yeah, so that goes to my next point, whereby AI GPU demand is still strong because hyperscalers for the most recent quarter itself, their capex is still an increase of 62% year on year. And they are still guiding higher capex for the next few quarters for this year itself. Yeah, so we do see that the GPU demand is still very strong from the hyperscalers. As for Nvidia's gaming segment, which represents about less than 10% of their revenue, it outperformed our expectations, and this is driven by the GeForce RTX 50 series GPU, which drives their AI PC segment. As for Nvidia's negative, as mentioned earlier, they took an impact from the US export controls on China segment. So as you can see on the graph on the bottom left-hand side, the red color bars represent the China revenue contribution to Nvidia's overall revenue, whereas the orange color line represents the percentage revenue from China itself. So as you can see from 3 years ago, the percentage revenue from China has been decreasing. And for the next quarter itself, Nvidia actually guided that China's data center segment will actually take a meaningful decline in that segment itself. However, even with this decline itself, they are still guiding a 50% year-on-year increase in revenue, which uh which which will come which whereby the growth will come from other segments. For example, the ramp of Blackwell, and also uh for example the gaming segment as well. Yeah, so we do see this as a positive sign because other segments will actually offset this decline from China itself. Yeah, so as for our outlook, we believe that um Nvidia will actually create a new modified chip for sale to China. For example, they will offset they will replicate the success from the previous H20 chips. For example, previously for the H20 chips itself, they actually replicated to fit into the regulations itself. So we believe that they will do the same thing again for these new export controls. And we also do think that the strong CapEx guidance from hyperscalers will continue to support this demand for AI GPUs. And overall, we think that Nvidia's 90% market share in GPU and their strong CUDA ecosystem will help it to capture future AI demand growth, especially driven by the AI factory build-ups. Currently, uh, Nvidia mentioned that there's around 100 AI factory that is being built. So this is a 50% year-on-year growth compared to last year itself. As for our call for Nvidia, we maintain accumulate. We raise our target price to 145 from the previous 130 because we lower our WACC to reflect better clarity on US export controls impact on Nvidia. For my next presentation, I'll present on Sunny Environmental's Phillip on the ground. And so for those who are not sure about Sunny Environmental, they are a company that designs and install mechanical equipment and also maintain the wastewater and new water plants. So 80% of their revenue actually comes from PUB, as can be seen in the top right-hand corner. These are some examples of the kind of projects that they take on. For example, 170 million biosolids treatment plant. So they will actually take on this contract to build this treatment plant itself. Yeah, so their current order book is 229 million. It is a drop of close to 30% year on year. And management said that this drop is because they did not take up many projects because of the high project financing. And they actually guide that because there's a higher number of projects, government contracts coming out this year, they will actually continue to increase the order book this year because of the higher number of government contracts. And their net profits actually dropped 47% year on year because they have some remaining COVID projects with high finance costs and lower margin. And so last month itself, they guided that the COVID projects actually make up about 50 million of their order book. Yeah, so this is close to about 1/4 of their order book. And they mentioned that most of these COVID projects will be ending early 2026 next year. Yeah, so touching on the high finance costs, as you can see on the bottom right hand corner, the finance cost is the row being highlighted over there. It increased 40%. So there's an increase of close to 800,000. Yeah, so this actually impacted their net profits because of the high interest rate environment. So this caused the finance cost to increase drastically. As for their balance sheet wise, net debt also increased 37% year on year because of the high borrowings for their projects. And their current ratio also improved slightly from 1.33 to 1.27. However, this current ratio is still healthy. Is still at healthy levels. As for the industry drivers for Sunny Environmental, there's the first one is the government's $100 billion budget to combat rising sea levels over the next century. So we do see more projects to combat the rising sea levels. For example, the building of dikes. And for example, a project that Sunny actually took up before, the construction of the project polder in Pulau Tekong itself. Yeah, so this is some example of track record that Sunny Environmental actually had with PUB. And they are also going into new segments, for example, the manufacturing of magnesium hydroxide and also renewable solar energy. Um, However, going forward, they still target a high revenue contribution from PUB. So these new segments are still immaterial as at the moment. As for our outlook for Sunday Environmental, we do think that the strong track record with PUB should help with winning future contracts, and we do think that their diversification will increase their profit margins. However, their diversification will still take time to be material lah. So now it will still contribute a very small segment of their revenue. Yeah. So that's all from my end. I'll hand over the time now to Darren. Thanks.
Yeah, thanks, Iqbal. Yeah, so I'll run through Thakral's initiation. So we initiated Thakral Corp. So for Thakral, it's a very, just a background on it. It's a very, very diversified company. It has many business segments. So some of its revenue is profit drivers or bigger segments include the Gem Life, as well as its lifestyle business where they distributed to drones for South Asia. Yeah, so basically all its business it has in Australia, its business is managing over 50s lifestyle resort under Gem Life brand. So for that they book the profit from Gen Life as associate because it's a 31.7% ownership by Thakral for Gem Life. They own 31.7%. So because of that is booked as associate, but it contributes about 40% to the bottom line for Thakral overall. So the next big one is the lifestyle segment. So the lifestyle segment they manage the distribution of drones. Basically they are the exclusive distributor of DJI products. So that includes gimbals, digital cameras, and accessories for drones. So that is in South Asia. So they have exclusive distributorship in 7 countries. So it's India, Maldives, and Pakistan, Bhutan, and a few others. So they also under the lifestyle segment, they also manage leading beauty, fragrance, and lifestyle brands across e-commerce and offline retail channels. So that includes brick and mortar stores. So currently they have 31 stores in China operating fragrance brands. So the fragrance brands are mostly under the L'Oreal brand. And they also own a 9.3% stake in the Current Body or the Beauty Tech Group. So there's an e-commerce platform in the UK. For drone business, they also have investments in Skylab and Bharat Skytech. And basically, their new business venture, they are looking at, or rather, they have started operations of Nespresso. So for Nespresso, they are the sole or rather exclusive distributor in India. So they are 100% 100% own that, and yeah, they also own a commercial real estate building in Singapore. So that's Riverwalk Building, and yeah, they also own Japan real estate investments. So that is under pooled investment vehicles ranging from 50% to 60%. So that is in Japan and 6 commercial buildings in Osaka and business hotel also in Osaka. So that is just an overview of all the businesses that Thakral is involved in. Yeah, next slide, please. Yeah, so for our key investment merits for them, the first one is accelerating growth in the lifestyle business. So the lifestyle business, we saw revenue jump 30% year on year. So right now they have 31 beauty and fragrance stores in operations in China. So over the next 2 years, they are targeting to open another 15 to 20 more stores. So they have also expanded their brand presence. So now include new brands like Miu Miu and USI. Yeah, so those are fragrance brands under the L'Oreal brand. And they are also broadening their product offerings by DJI into South Asia and increasing the adoption across many sectors like agriculture, media, and such, and enterprise. Yeah. So if you take a look at the top right-hand picture, so those are some of the new products and related accessories that they distribute. So it's some drones, microphones, a GoPro, and such. Yeah, so for that, we see double-digit growth, like 30% growth. So that is really driving revenue growth. Because for Thakral, as I mentioned, the Gem Life, or rather the investment business, it's booked as associate. So as a result, the lifestyle business contributes about 95% of the FY24 revenue. So lifestyle business basically is this the drones and the fragrance business, as well as Nespresso that is upcoming. So the next growth driver for them is Gem Life. So we expect exponential growth on Gem Life, mainly because of its dual income model and more homes settled and occupied over time. So just to recap, in FY19, they started off with 290 occupied homes. And now, 5 years later or 6 years later, they are at 1,804. So they have opened an average of about 300 new homes every year. So how Thakral benefits from that is they own from site fees, because this Gem Life is a land lease model where the residents own the homes and they lease the land. So every week they have to pay 200 Australian dollars to lease the land. So that is a recurring income for them as more homes get occupied, as well as the fact that they'll get development profit from selling the homes. So it's really a dual income stream for them. So as more homes get settled and as more basically more homes get occupied, this will keep growing. And currently they have, as of first quarter, they have 1,862 homes. So that translates to about a yearly recurring revenue of about 19.4 million. So that is a 100% stake, and you need, before accounting for the Thakral shareholding. And also they have a target of 6,500 homes in, or rather a pipeline of 6,500 homes by 2033. So by then, that would be a yearly recurring revenue of 67.6 million. And this amount does not include the fact that these site fees per home, it will increase based on inflation. So roughly about 3% growth. If you include that, the yearly recurring revenue will be way more than that amount that I mentioned. Yeah, so that is the growth for Gem Life. And there are some factors that are boosting the demand for Gem Life, like the government support measures like the age pension scheme, as well as the rental assistance, where the government basically they pay or rather subsidize a portion of the site fees. So these are driving the demand for Gem Life. And yeah, basically Gem Life is, like I mentioned, it's an over 50s retirees home. Yeah, and it's something like a competitor to the retirement homes. And for the last investment merit is new ventures that are fueling growth. So first is the Nespresso business. So they started the Nespresso distribution last year. So they launched an e-commerce platform which opened last year, and they recently just opened the first boutique store in March. So you look at the bottom right corner, that is the picture of the launch of Nespresso. So going forward, they plan to sell this through e-commerce platforms as well as B2B channels, where they can sell to hotels and offices as well. Yeah, so that is a huge growth driver for them. So Nespresso currently, since it's in the setting up and starting up cost phase, so we do expect some losses over the next couple of years, and we expect Nespresso to begin being profitable after the third year on, or rather after roughly third year onwards. Yeah, so a few years of losses from Nespresso. And another venture that they have is that they acquired a small stake in a 21-acre healthcare and mixed-use development in Gurugram. So that is slightly southwest of New Delhi. It's near the capital, New Delhi, and they do plan to develop that and perhaps get some development gains. And they are working together with some healthcare advisors and some other investment advisors as well to manage this new stake that they have to develop the land into and currently the plan is to have 7 acres of it to be used for healthcare, and the remaining to be used as residential, and yeah, basically residential. Yeah, so that's for the key investment merits. Next slide, please. So just a quick update on what's happening for the Japanese fuel properties that they own like 50% stake under pooled investment vehicles. So these are the 6 assets that they have, all in Osaka, 6 commercial buildings and 1 hotel. And the occupancy has been high at 96%. So these are Class B assets and they're relatively stable. So these provide very recurring revenue for Thakral in a situation where the lifestyle business can sometimes fluctuate quite a bit because of consumer demand. So this remains a stable base together with the side fees from GemLife. And for the picture we see on the right, so that is GemLife's 13 resorts that they have currently, and 10 are already occupied, and the remaining 3 are just beginning construction. Yeah, next slide, please. Yeah, so next is some of the risks that we see for Thakral. So currently, Thakral has they're exposed to a lot of FX risk or foreign exchange risk. That's mainly because there's so many businesses and they are all mainly overseas. So they're exposed to like the US dollar, the Australian dollar, the Japanese yen, Hong Kong dollar, and such. So their plan is to basically they manage that by keeping these currencies in designated currency accounts, and they do not convert it back to functional currency. So they only convert it back to Singapore dollars only as needed. So otherwise they'll just leave it as those overseas like currencies like USD or AUD. So that is a transactional part, but for translational part, because they have a lot of assets that are on a balance sheet, like that are fair value and associates and such. So there is some translation risk when they convert those overseas assets back into Sing dollars on the balance sheet. So that is a risk. The next risk is credit risk. Basically, there are trade receivables that they get from their sales. So how they diversify is that they have many customers across different geographies and different segments. For interest rate risk, currently they do not hedge any interest rate risks, but in the current environment that benefits them well because interest rates are coming down. So they will benefit from lower interest rates going forward. And that possibly could improve overall profitability as well. And another factor is another risk is the government policy risk, especially for the GemLife part, because currently this Commonwealth Friend Assistance Scheme subsidizes the weekly side fees for GemLife residents. So if the government pull this back or reduce this amount, so that might affect the demand for these land lease communities, as the side fees do not get subsidized and they pay out the pocket. So government policy risk is quite a big risk for GemLife, but currently we don't think it's unlikely that government will just change this policy anytime soon. And for basically the US tariffs, minimal impact from that for now, because the beauty and fragrance products that they sell in China maybe are mostly manufactured in France and imported by L'Oreal directly. And for the DJI distribution, they focus on South Asia, so not much impact. Yeah, next slide, please. Yeah, so with that, we initiate our coverage on Thakral with a buy recommendation and a target price of $2.04. So how we value this is based on 8.4 times FY25 PE. So that is a 50% discount to the Australian peers that are trading around an average of 16.8 times. So these Australian peers, meaning those who are operating land lease communities as well. So for Thakral, because they are so very, very diversified, so many business segments, and they basically do not have any close peers or competitors that are listed in Singapore. If you look globally, they also do not have any like peers as well. So the closest are probably like the Australian land lease community operators. So as a result, we slap a 50% conglomerate discount to them and we value them at 8.4 times. And as a result, the target price is $2.04. Yeah, so historically, Thakral is trading at about an average PE of 5.9 times over the past 5 years. But going forward, there's a lot of visibility in their earnings and a lot of growth potential. So we believe this 8.4 times higher PE is justified, as we see GemLife is starting to scale exponentially and revenue streams from like their DJI distribution channels and sales from China all are seeing double-digit growth, like 30% growth year on year. So we think this higher PE is justified also going forward. Yeah, so the chart at the bottom just shows basically some of the stats of the closest peers, which are the Australian companies in the land lease community, like Lifestyle Community, Stockland, and Engineer. So they are trading around about 16 to 19 times PE. Yeah, so that's all for initiation for Thakral. I hand over time to Zain now to do technicals. Thanks.
Thanks, Darren. Good morning, everyone. We'll move on to the technicals. Next slide. Yeah, so first up, looking at the S&P 500, last week, it was quite sideways, up 1.8% for the week. So it kept up on Tuesday and just traded sideways for the rest of the week. So I think this week we are likely to see further price consolidation going ahead as price has just been range bound since we tested the uptrend channel breakdown at 5,970 points. So for current resistance, likely to be at 5,940 to 6,040 area, support at 5,720 to 5,800 area. Next slide. Yeah, so this is our ETF money for May. So we titled it mostly sideways or down in June. So in terms of the performance of the asset classes in May, most of them were in the green. The top gainer was Bitcoin. ETF tracking Bitcoin research for the second consecutive month up 10.6%. The loser was US Treasury bonds down 1.2%, and gold was essentially flat. In terms of the current trends, most of them are in a range consolidation, with the exception of oil, which is in a downtrend. In terms of outlook for June, we expect sideways consolidation for US Treasury bonds, gold, and Singapore equities, while the rest, such as US S&P 500, oil, Bitcoin, and Hang Seng Index, are likely to pull back. Next slide. So first, looking at the S&P 500 ETF VOO, price has remained above the $502 breakout of the short-term downwards resistance line in May. After that, there was a gap up above the resistance of 523, where we tested the resistance at 545 is currently consolidating sideways. So there could be a bit of a pullback from this current area of resistance, where it could possibly fill the $523 gap if it does retest the resistance once again. So that will be about 3% downside from the current levels. Next slide. Next one for the Treasury Bond ETF, IEF, nothing much, still moving essentially in a range between 93.60 to 96.70. So we expect further range consolidation to continue in June. Next slide. For the Gold Mini Shares Trust, GLDM, also currently it looks like to be in a bullish flag consolidation between around 63.60 to about 68.20. So I think we're still likely to see some sideways movement going ahead. Next slide. Next one for the oil and gas exploration production ETF XOP. I think there was a bit of rebound to retest the previous support breakdown level at $122 and also a downtrend resistance line. So I think we're likely to see some pullback from this area to potentially retest $115 horizontal resistance where it broke out in May. Yeah, next slide. For the Bitcoin strategy ETF, it continued a strong momentum in May. So it retested the $23.50 level and afterwards had a small pullback. So I think we're likely to see a bit of a slight further pullback ahead from this current area of resistance to retest on the recent swing lows closer to about 22.60 to 23.60 area. Next slide. For Singapore equities ETF, it remained quite resilient. So it just retested the $4.01 level and then just remained sideways. So we could still see some further consolidation ahead as it remains above the short-term uptrend channel support. Even though it's at a main uptrend channel resistance area, if there's a break above $4.01, we could still see some possible upside ahead, possibly to maybe closer to 410. So I think we could see some consolidation, but more towards upside bias if it does break above the current resistance. Next slide. Next one for the Hang Seng Index ETF, it retested the previous support breakdown level. That's around $82, and then seeing a bit of a consolidation. I think we're likely to see some pullback from this area of resistance, which was previously support. So it could retest on the lower levels closer to about 82 to 85 or around there. Yes. So we could see a pullback for this month in June. Next slide. So for we also have our Thai SDR money for May. So we titled it most Thai SDRs are likely to pull back in June. In terms of the performance in May, most of them were in the red. The top loser was Apples of Thailand, which was down 13%. The gainers were Siam Cement, which was up 3.7%, and Delta Electronics, which was up 6.1%. In terms of current trends, Kasikorn Bank remains in an uptrend, while some of the others like CPO, Siam Cement, Advanced Eco Service, and Delta Electronics are in the range consolidation, and Apples of Thailand and PTT remain quite weak in a downtrend. For outlook for June, we expect most of them to pull back, which are Airports of Thailand, CPO, PTT to extend the weakness that we saw in May, and Delta Electronics to pull back from area of resistance. Then Kasikornbank is likely to rebound and to continue its uptrend, while Siam Cement, Advanced Info Service are likely to trade sideways. Next slide. So first up, looking at Airports of Thailand, overall, we can see that the downtrend is still quite strong. Price attempted to break above a downtrend channel resistance to test above $40, but that failed to hold after the earnings, and then price continued to make a lower low below the support of $34. Also, we are likely to see some further weakness ahead to maybe retest about $29 to $31. Next slide. Next one for CPO, also price failed to hold above the breakout of the downwards resistance line breakout. So failed to hold the $50 level, and we're back where price is currently at 47. So you could retest the old resistance, old support level of $45.40, which is held since the start of this year. Next slide. So for PTT, price action is also weak, just consolidating sideways, but still making lower highs and resistance above $101. So we are likely to see price come down again to perhaps retest the $93 support area again. That's closer to the descending broadening wedge support as well. Next slide. As for Kasikornbank, still remains the bright spot among the Thai SDR. So price in May, there was a continuation of the bullish momentum with the breakout of around $153. Then afterwards in the last week, it did a retest of this breakout. So I like to see some rebound from this level, as overall it remains in a long-term uptrend. Next slide. Yeah, for Siam Cement, price action looking better, even though it's a long-term downtrend. Price action for now it remains in a bit of a consolidation since March. So price has just been trading sideways around 160 to about $180 about there. So we are likely to see this consolidation continue for now. Next slide. Next one for Advanced Info Service, also still in a very prolonged consolidation. So still finding resistance above $301 and price pullback in the second half of May. So we are likely to see the price actually retest on the recent breakout level. That's around 276 to 285 area. Then likely to find some support over there. So we could likely to still see some consolidation going ahead in June. Next slide. My last slide is on Delta Electronics. So Delta Electronics, there was a large rebound close to $118 where it filled the price gap, and then afterwards it's doing a bit of a pullback. So I think we're likely to see some further pullback hit from this area of resistance after such a strong rebound that happened in April to May to perhaps retest some of the lower levels closer to $87 to $98. Yeah. So that's all from me. I hand over time to Glenn to talk about the Singapore Weekly. Thanks.
Hey, thanks, Zane. Yeah, so for Paul isn't around today, he's on leave, so I'll be covering for him. Just to note that if you have any questions, I think for the counters that he covers, we will try our best, but yeah, if we can't answer it, do hope you understand, and also just post it to the P3 and I'll get him to reply it on the community instead. Yeah, so anyway, just going to the this tactical views. Nothing much on Singapore side, but US as usual, it's a very busy, hectic week. So I think the main news focus was on the legal status of the Trump's tariffs. So 28 May, we had this short reprieve, where we initially thought that, oh wow, his tariffs can actually be blocked by the courts. They ruled his recent new tariffs on the steel and aluminum as unconstitutional. But this was only a one-day kind of reprieve, because on 29 May, the appeals court did grant it a temporary stay, and that the tariffs will remain during this legal review. So even though they're reviewing it, the funny thing is that they are still allowing it to go through. And indeed, he did go through with he's going to go through with it, right? And the planned tariffs are now going to increase from 25% to 50% on the foreign steel and aluminum. So what does this mean coupled with the automotive policy shift where there's this new mandate that the automakers must produce their vehicles and parts in the US within 12 months. So currently, a lot of the vehicles in the that are being sold in the US, right, are considered made in US, right, made in America. But what is probably not as widely publicized by these companies is that all the parts, a lot of the small parts, you know, and most importantly, the battery, especially for an EV company, is not made in the US, it's made in China, right? So this mandate coupled with this increase in the tariffs on the steel and aluminium will probably raise the industry-wide production costs, and this will hit a lot of the automakers, but more importantly, Tesla will also be impacted because we do cover Tesla, and also Tesla is in the Max 7, the Magnificent 7. So in Tesla news, also a lot of news on Tesla in the past week. The first one is that, you know, I think the biggest highlight will be that Elon Musk finally left the Doge, right, or Dodge. Yeah, so he's going to fully concentrate on the company that is actually paying him, right? And also they plan to ramp up they plan to ramp up their affordable EV production in Texas by late 2025. So it's a good thing that, you know, they are moving their production into the US, but still no clarity on where they're going to get their batteries from, whether they're going to move it into US. But it doesn't seem like it, because they have also approved for a new battery recycling facility in South Australia. So it's quite contradictory with what Trump is trying to, at least the Trump administration is trying to push for, which is to move production 100% into the US, right? Whereas, you know, Tesla is here going and saying, okay, we're going to open a new battery recycling facility in South Australia, right? And they're going ahead with their other plans as well. Also, I think last but not least, they did face sales decline again in Quebec, in Canada, right, due to the regulation as well as Musk's political stance. So it's sort of expected, you know, we have seen the deliveries for the first quarter, it was extremely bad. I think second quarter, we are also anticipating that it will not be a good quarter for them, right? We will see deliveries drop again. The share price has still been rallying, mainly due to a lot of the news, you know, that Elon Musk is leaving, you know, and that he's going to fully concentrate on Tesla. So these news do, it does shift the share price upwards, right? You know, it doesn't really affect the core business of the company, which is the selling of cars. Yeah. So for we do still have a sell recommendation for a sell call on Tesla with a target price of $200. Moving ahead for the week ahead, I think that there are only like two main dates that we will be looking at. On Thursday, we have the Singapore April 2025 retail sales figures. And on Friday, I think this is the big one, which is the US May 25 employment figures. So this will be showing us the data and statistics for non-farm payrolls as well as the unemployment figures. So these two are, I think, the most important, at least for the coming week. As for the corporate insight webinars, we have a few. In this week, we have, I think, 3 in a row. We have LHN on 3rd June, Manulife US REIT on the 5th June, as well as Sing on 6th June. And Yoma, I think, is about 2 weeks later on the 18th of June. Yeah, now moving on to the next slide. Yeah, so I'll be covering for Mel. Yeah, back. Yeah. I'll be covering for Mel. She did publish a report on China Aviation Oil. She is currently not in yet because she is at the Zixin results briefing. So hopefully she'll be back later to answer any questions that you have. So for China Aviation Oil, it's just an update. For those who don't know what they do, they are the largest physical jet fuel buyer in the Asia Pacific region, and they also are the key importer of jet fuel into China. For China Aviation Oil, we do accumulate to from a neutral to from a great upgrade, from a neutral to an accumulate. We see that international air traffic has surged by 32% year to date, and this will be beneficial for China Aviation, and we also expect that their profit from associates will rise by at least 12% year on year in FY25, which will be supported by the continued recovery of inbound leisure as well as business travel. We also expect a sort of a pickup in the trading volume in the first half, but only in around the low teens level, which will be driven by the rising jet fuel as well as the sustainable aviation fuel demand. Yeah. So for the positives, the first one being that the increasing contribution from the SPIA, or the Shanghai Pudong International Airport, it did rise by 10% year on year, and it's really surpassing the pre-COVID levels by 5%. As for the second positive we're looking at would be the increasing trading volume that I mentioned earlier, with a higher trading margin. So the trading volumes on the Asia North America route have improved in the first half, and they are and this was really driven by the rising jet fuel demand. So for the outlook wise, the US, we feel that the US tariffs have no direct impact, and the jet fuel exports from Asia to the US for international flights remain tariff-free for now. However, but the secondary effects such as dampened consumer sentiment may affect the outbound travel demand. And while the first half is usually typically seasonally stronger for China Aviation, we believe that the company is still on track to achieve more than 50% of our FY25 PATMI forecast. So as I mentioned earlier, we do upgrade our rating from neutral to accumulate with a higher target price of 90 cents. And we do expect at least a high single-digit year-on-year PATMI growth in the first half of 2025. And the re-rating catalysts for China Aviation include a better than expected dividend payout ratio, as well as increasing contribution from the SPIA. Yeah, so that's all I think that's all the slides we have, right? Yeah. So we'll just jump straight to the Q&A. And since I'm here, let me just take on a few of the questions first before I hand it over to the rest of my colleagues. Yeah, good question here. What is the outlook of China EV market as competition is heightened with price cutting? Do we see it stabilize sooner? At what level at what level as reasonable, please? Yeah, so we don't cover the China EV market, but I can just give some of my thoughts on this. I think the China EV market is really dominated, by BYD. Firstly, they currently have 1/3 market share in China, right? And then you have all the other players. So you have, I think, Li Auto, and then you have Tesla, and a few others, Wuling, right? And then all the other small players. Even if you look at NIO is also a very small player in the China EV market because they are targeting more towards the higher end market, right? So I think what we have heard from the industry experts, at least on this, right, who really do sell cars in China, is that there's a bit of a consolidation going on where all the small, very very small players who try to start up, right, and try to believe that they can be the next BYD are starting to close, and they are really feeling the pressure, right? So the big companies like BYD, they can afford because they really have scale and they are growing very big. So they have scale to be able to cut prices down. But the smaller players, those that maybe sell, a couple of thousand maybe, or less than a couple of hundred cars a month, kind of, they are feeling the pressure because they don't have the scalability. They're unable to grow. So these small companies will all start to close down, and it will be the market share will be consolidated with only maybe a dozen or so of these companies who are quite big, right? I think BYD will definitely still be there. Tesla will also still be there, although the difficulties that they are facing in China is quite drastic, right? Their market share is declining quite a bit, but sales is still improving slightly. But the margins for them in China is still very poor as compared to other countries, because they have I think that's the only market where they have to fiercely compete with the Chinese EV makers. Unlike in the home country where the EV makers, Chinese EV makers, aren't it's too expensive for them to enter, right? So I think we'll see sort of a consolidation in the Chinese EV sector. Okay, let me answer the other questions. And the timeline wise, I think it won't be in the short term. I think this will be at least a medium term where we'll see a consolidation. Yeah. Okay, there's one on the banks. What's the outlook for Singapore banks for second half 2025 with no clarity on interest rate cuts? Yeah. There's no clarity, but the banks are preparing for it, right? They are, preemptively sort of cutting in their funding costs. So you have seen that fixed deposit rates have gone down, current account rates have gone down, right? because it's really just to buffer that, to maintain their net interest margins. If the rates are held higher for longer, it'll be slightly beneficial for the banks because of the net interest margins that will hold up better. But the banks, I think, are all now concentrating on, fee income growth, right? Loans growth is quite healthy, just surprisingly, even despite the rates have not really been drastically cut. But if you look at the Singapore interest rates, they've actually been declining slightly faster than the Fed rates. So the loans growth has still been relatively healthy, around mid-single digit. But the loan yields are not as attractive as it was before. So net interest margins are still expected to decline slightly. But the banks have taken some measures, right? Like I said, cutting funding costs, putting loans, a lot of their excess deposits back into longer tenure interest earning assets, right? And also the fact that CASA, or current account savings accounts, the ratio has been steadily increasing, mainly due to the fact that a lot of the previous older fixed deposits are starting to mature, right? And now fixed deposit rates are so low that consumers are just deciding to place it back into their current account because they don't really know where to put it. So that's a dual benefit for the banks, right? If the customer leaves it in current account, savings account, is very, very low funding cost for them. So they just place it into like treasuries or bonds. And then secondly, if the customer is looking to invest this money, right, they will come in and then say that, okay, how about you invest with us? We will have some wealth products, like investment products, this kind of products that they are able to push to them, right? So that will grow their fee income. So this is really a double benefit for the banks, right? So I think they're quite stable. I think the main I think there's another question here, what is the potential in SG banks for long-term investment? I think for long-term, if you're looking at I'm not sure, but when you say long-term, how long is that long-term, right? But at least for the medium term, right, short to medium term, is the banks are giving very, very attractive dividend yields. So we don't see the earnings coming in very high, right? It will probably be flat or even a slight decline. DBS has really warned us, that you expect a decline in earnings also due to the global minimum average tax that they have, right? So I think for all three banks, it's quite similar story. The earnings will come in very, very flat. But what is the kicker here for the banks is that they are still giving back their excess capital, right? They have not stopped it. So that's a plus. So you'll see about a 10% increase in the dividend payout ratio across the board. And this will be, you suddenly get a boost from maybe getting 5% sort of dividend yield to now 6 plus 6.5%, 6 odd percent dividend yield for a bank for at least the next 2 years. Right? That's what we are estimating. So I think for the banks now, it's more of a dividend play. Again, if you think long term, it's the banks are the macroeconomic environment now is really unstable. I think nobody can predict what Trump is going to do or where it's going to hit. So if the banks will be able to sort of outlast Trump, right? I guess because the maximum he can stay in office, although he has said multiple times he wants to have a third term, but I don't think I highly doubt that will go through, right? The maximum he can stay in office for now is 4 years. So if you're thinking long-term wise, when the situation stabilizes, the banks can go back to growing their profits, right? Instead of just having this stagnant thing, then they can accumulate more capital again, and we could possibly see another round of capital returns if you're talking about really long-term. So I think there is definitely still potential for the Singapore banks if you think about a long-term investment. Because you really need to ride out that volatility that we have seen that time, especially during April when Trump announced the tariffs, right? And the whole all three banks just collapsed. So I guess it's really waiting for a time when it's or either you dollar cost average or you find if you're going to do a long-term investment. Yeah, it's just a bit long to answer that question. Okay. Yeah, quite a few questions for me suddenly. Okay, there's one more here on OCBC. It's asking, why is OCBC bank share price action seems weaker and detached from the other two Singapore banks? Thanks. Okay, multiple reasons why. So just to put it out there first, for all three banks, we do favor DBS, mainly because they have a fixed dividend policy. Not fixed dividend policy. They have a fixed dividend per share, or DPS. The other two banks have a floating and semi-floating. So let me get more into detail on that first. For DBS, they just give you an absolute amount. So for this year, we are, based on what they have said, right, we are estimating a $3.06 dividend for the full year of FY25. So it's very easy to see when you enter, this is the dividend yield I'm going to get, right? And it's also very stable. So even if earnings dip down slightly below what they have guided, or what analysts like myself have estimated, right, they will still give you that $3.06. So it's very secure. Whereas for the other two, if you look at the let's say you look at the OCBC and UOB. UOB is a semi-floating, so theirs is 50% base dividend payout ratio, and then they'll give a 50 cents per share extra on as part of their capital return initiatives, right? So it's a half-half, right? If their earnings do drop a little bit, we might see the base dividend drop a bit, but at least we are assured, that dividend is quite fixed. The special dividend is quite fixed. And for OCBC, it's a full floating, so it's a 50% plus 10% dividend payout ratio. So if their earnings really suddenly drastically drop, right, even the returns, the dividends that you are getting will not be assured, because it's fully floating. So I think that's the reason why OCBC is a bit lackluster. And also the other fact is that they have not settled that GE issue yet, right? The Great Eastern issue, right? They are still I would say a bit beating around the bush, right? They don't really know what they are going to do with it, right? I think the last when we spoke to them was that they are pushing it to Great Eastern, saying that is your issue, that is your problem, you have to settle it. But it's quite funny seeing that they own like 90% of GE, so of course they're the parent company. They should also be responsible in part, for what happens with GE. Yeah. But they're not counting out a higher offer price, right? If they manage to finally sort of come to, I think, have an agreement with that main minority shareholder that is holding out. Yeah, so I think that's the reason why OCBC is a bit lackluster as compared to the others. Yeah, okay, wait, let me answer this. Okay, your views on SGX, as it seems very volatile and swings between 13 to 14. Dividend solo, is it likely to increase dividend? Hold or sell? Yeah, we do have an accumulate call on SGX still. The volumes are really, if you look at the MAS statistics, the SGX, they release monthly volume increase statistics, right? It is very, very positive, right? We're seeing like 30-40% kind of increase in their volumes. So when the volumes increase, right, it will go to the bottom line, because they earn based on volumes, right? So it's like your revenue go up, the bottom line will also grow up, while everything is sort of quite stable. So I think this year will be a good year. But you're right, the dividend is very low. We have mentioned it to the management. We are saying that the investors and shareholders do complain that, right, you are earning so much, but yet your dividend payout ratio is not going up. And the reason that they gave is that they want to have a very stable dividend policy, right? Because as I think they themselves know, as we also know, their business is quite volatile. It depends on the volatility. So if there's a lot of volatility, a lot of trading, a lot of volumes, then you'll see that their earnings will increase. And then and the thing is that in the past few years at least, volumes have been very healthy, right? At least from COVID times. Now we have the Trump times, right? The volatility has spiked up, and it has remained at these heightened levels. Yeah. So they did say that, I think I spoke directly with the CEO, and he did take it into consideration. He was like, yeah, he understands. But I think he didn't confirm or deny, but he did say that he will take a look at it, right? And whether or not they really do in the end increase dividend, or change their whole dividend policy, will depend on the board, of course, right? And what they propose to them. Yeah, but I did say that it would be better when in good times, you have a higher, you base it on a dividend payout ratio like the banks, right? 50%, 60%, or 70%, right? So that you reward the shareholders, right? For when when the bad times they get less, but good times they get more, right? So I guess that's one of the main thing, that the dividend view for SGX is really quite lackluster. Yeah, okay, I think there's quite a few more for me. Yeah, BYD, a buy on the dip. Yeah, we don't cover BYD, so a bit hard to say. Yeah, but I think BYD, the dip really is because, I think they have lost a bit of market share. And they're not, I think, growing as fast as you would as people are sort of expecting them to grow, or at least as historically seen. So it's sort of uh, natural, right? Because the last year they did have a very good year, right? So they're coming off this very high base, and now they have to go on top with another high base to try to create an even higher base, right? Like to go above, right? So I think that's the reason why the growth has slowed slightly, but they are still the market leader in China, right? And if you look in Singapore as well, right, you can see BYD cars almost everywhere. So I think the main kicker for them, or the tailwind that they would see, would be how fast they can expand out of China. If the regulations, the government regulations does allow it for them to expand, more into Europe, into other parts of the world, instead of just Asia, and yeah, instead of just Asia, basically. Yeah, there's one more here on BYD. I think CK did ask, BYD is now offering bonus shares 1 for 2. Is it worth to take up? Yeah, I'm not, I don't think I can. It really depends on your stance on BYD. If you are uh, uh, quite bullish on them, right? And you are a long-term holder, then of course it would make sense, right? But if you feel that there's not much growth for them anymore, then it doesn't really make sense. But if you tend to hold it, then I think it would definitely be it will be worth to take it. Yeah. Yeah, current Singapore banks valuation still considered overvalued. Which one to accumulate and which one to sell? We do have an accumulate on all three banks. I would say, as I mentioned earlier, again, sorry, a bit confused with all the cars now. DBS is our top pick, right? For the banks, mainly for the fixed DPS, right? Where they are the only banks that say they are able to go above 60-70% kind of dividend payout ratio. Yeah, so I think, yeah, the valuations, I did a short paragraph on this, I think, last month. But yeah, we will look at, when you look at the bank, you typically look at this PB ratio, right, or price to book ratio. Yeah, but PB ratio has gone up, but if you look at the ROE as well in comparison, it has gone up in line with this PB ratio. So we believe that, while yes, PB has gone up, but ROE also has gone up in line, in tandem with this PB ratio. So we feel that this will further improve their valuations if the ROE is equally in line with the PB. So I don't think they are overvalued now. I don't, unless we see a situation where ROE has an inverse relationship with the PB ratio. Then you realize then this will be a signal that, okay, there is probably, it is getting over to an overvalued area, right? Because their earnings is not keeping up in line with how much their value at, basically. Yeah. Okay, there's one. Okay, there's one. I think so. Not for me. Oh yeah, this is a very good question here on GE. With Q1 GE earnings up significantly, do you reckon this could motivate balanced minority shareholders to continue to hold out for better deal from OCBC? You reckon who will blink first, GE minorities versus OCBC? Oh, this question, I wish I can answer it also, because it's really, I mean, the last one, yeah, who will blink first? I I believe that the uh, I believe that the GE minority shareholders, they really held out for so long, right? And they technically are not, they don't have I mean, okay, like they do have things to lose, but if you look at the GE minority shareholders, they are they have been holding out for quite a while already. I don't know how long they have held their GE shares, but probably since the inception, or since like at least more than a decade ago. So to them, what is holding out for a few more years, right? And they don't have a timeline to meet, or they don't even have shareholders to answer to, or analysts to answer to, right? Whereas when it comes to OCBC, right, we keep hounding OCBC about this GE issue every quarter we meet them, right? And not just us, the analysts, but if at the AGM as well, OCBC AGM, you also have investors and shareholders also asking them on the same issue over and over again, like, when are you going to settle it, right? Because it's been like this thing that's hanging over their head for, I think, almost like close to a year now, right? So if you ask me, I would believe that OCBC will have to do something soon, right? OCBC/GE lah. Although they keep saying that they are pushing a responsibility to GE, but they do have to do something. So I believe that OCBC, in order to wrap this whole thing up, right, and the fact that if they can't take over GE, then there are plans to have this one OCBC, these grand plans that they have to have this one OCBC group and integrate their insurance arm into the bank, right? Will also be halted, right? They can't proceed with it because they don't, right? They sort of contradict themselves because they don't have this full ownership of GE. They can't have this big one OCBC group as well. So it's not just getting questioned by analysts, getting questioned by shareholders, or even by the regulations as well, right? By SGX, Regco as well. They also keep asking them, hey, what are you gonna do? Now you have this company that is that you own, that is the halted trading has been halted, suspended for so long. Like you have to do something, right? You have to make up your mind, right? And then last but not least, they also are now pressured because they want to move forward with their plan to integrate it fully into OCBC, but this is sort of stopping them from doing so lah. Yeah, so I believe if you think of it and look at all the factors, and that the minority shareholders, the only thing that they lose is money basically, right? If they don't accept the deal, right? Even then they will still have the shares of GE, right? It's not like they will lose the shares. So I think OCBC has a lot more to lose in this scenario if you look at it, and that they could possibly blink first. Yeah. One more on the GE minorities. Will they still continue to entitle dividend payouts? I'm not very sure, but I believe so. If even though the shares are suspended, you should be able to get the dividend. But I'm not 100% sure. It'd be best if you can ask your either your dealer or your financial advisor on this, yeah, or whoever deals your GE shares. You can just ask them. Yeah, but it would make sense if you are still entitled to the dividend payout since you're still a shareholder, right? It's just that you cannot trade the shares. Yeah, the CATL, yeah, I think the price dropped quickly. I think it's multiple factors, right? It could be some of course some profit taking after the IPO, where they a lot of the initial investors, they would want to finally be able to cash in, right? Or maybe those very early investors, so they cash in on this. Also, the whole environment now is a bit especially after Trump announced that they must put the full production, right, into the US, right? Even batteries cannot be outsourced from China. So I think that could be one of the possible reasons also why the share price dropped, because they are the main I think they are Tesla's battery supplier, right? So if Trump says that, right, then it could be an indication that their main customer, right, is having to move production into the US. So that could be one of the reasons why as well, right? I think the whole environment regarding anything related to the automotive industry now is very volatile and it's very unstable, because it's not known what Trump is going to do next. Now he really did the steel and aluminum tariff, which went through. Then he also wants now to push them to move everything into the US. Otherwise, nobody knows what kind of tax he's gonna place on the automotive makers. Yeah, so I believe that these are the multiple reasons why their share price did drop so quickly after the IPO. Yeah, okay, I think I tried to answer as much as I could already. Let me hand it over to the rest of my colleagues. Thanks.
Thanks, Glenn. I can take on some questions. Yep. One question. Hi, Iban. How many years do you think the high growth story of Nvidia will last? I think I don't really have visibility beyond this year itself, because I mean, of course, the long term drivers will come from talking about the AI data center investments, for example, your Stargate investments, and also how Trump will also collaborate with the Saudi region to build up data centers. Yeah, so that is the very, very long term kind of growth story. However, I can't really quantify that yet, so can't really confidently give you an answer whether the growth will continue beyond this year. However, this year the growth story should likely to continue because I'm basing it on the hyperscalers capex. Because for the next few quarters itself, they are still guiding higher capex. And where all these capex will go to, it will mainly to go to building up their data center. And within the data center itself, they also need GPU racks in order to power the AI processing. So we estimate the total cost of the GPU racks within every data center investments to be about 50 to 60% of each data center investments. And Nvidia themselves also say the AI factory build-outs, there's around 100 ongoing right now. And this is a 2 times increase from the previous year. So this kind of growth story will continue to drive Nvidia at least until the end of this year. Yeah. I think there's some question on there's a few questions on Grand Venture Tech. So there's one question, why did the Grand Venture Tech rise so sharply? And also comments on Grand Venture Tech, and also whether there's any news of the price of the offer. Yeah, so just to give some context, we don't cover Grand Venture Tech, but just to give some hopefully give some insights. Yeah, so Grand Venture Tech actually, the stock price actually rose quite sharply today because during the weekends they actually came out with an announcement to say that they are undergoing a discussion of about the acquisition or purchase of the stock itself, but they did mention that it doesn't mean that this discussion will come out with a conclusion of whether any consolidation or acquisitions will take place. Yeah, so the price may have shot up because investors may be speculating on the result of this discussion, but as of right now, there isn't any offer price being rolled out. Yeah. So hopefully that answers the questions. There's a question on WeHer. What is our target price and any reason it pulled back quite a bit recently? Yeah. So for our latest report in early May, if I remember correctly, yeah. So in early May, our target price was 62 cents, and that is including the special dividends itself. So the special dividend payout was 7 cents. So excluding the 7 cents itself, our target price right now will be 55 cents. So to answer your question, why did it pull back quite a bit recently? Yeah, so it is basically the giving out of special dividends. So 7 May was the last date in which investors holding on to WeHer stock can receive the special dividends. So in 7 May itself, the stock price was about 51 cents. So 8 May itself, it dropped by about 7 cents. So that is the amount of the special dividends. It dropped to about 44 cents if I remember correctly. Yeah, so beyond 44 cents to the current stock price of about 41 cents, that may be based on momentum because I think there's a lot of trading going on. Yeah, but fundamentally, I'm still quite positive on WeHer because recently they have announcements that they actually won some construction contracts, and construction has been the segment which was pulling them down in terms of their fundamentals. So this is good news for WeHer lah, in terms of the 2 BTO projects which they won in their construction segment. Yeah. Yeah, so there's this question on comments on Grand Venture and OKP. Yeah, so Grand Venture portion I answered just now. For OKP wise, they are construction company which does uh drainage expansion. So they will work on construction projects to expand the drainage in Singapore and also cycling paths. Yeah, so cycling path wise, there's the government initiative to expand the amount of cycling path from about 600 km right now to about 1,300 km in the whole of Singapore. Yeah, so that is about a 2 times increase lah. And I do think this is a very good kind of industry driver for OKP because they are very established player in terms of the cycling path expansion. So they will take on construction projects to expand the cycling path itself. And recently they just announced that they won about a $258 million contract to expand the cycling path, and this contract will actually last for 6 years. So if you look at it from an annual basis, that will be about 40 plus million per year, and 40 plus million is about 20% of their revenue right now. Yeah, so I think that is quite positive for OKP. There's a question: steel and aluminium tariff increment to 50% by US. What's the impact for these sectors over here in general and BRC specifically? Will the supply diverge to this part of the world and pushing the prices lower going forward? Yeah, so regarding how steel and aluminium tariff impact will impact BRC Asia, right? The short answer is that it doesn't have much impact on BRC Asia because I have also clarified with management regarding this question, how will the tariff impact on steel actually impact BRC Asia? So the reason why it wouldn't impact is because BRC Asia directly source its steel from mainly Asia. So the steel mills across Southeast Asia and also from China itself. So it doesn't source its steel from US itself. Yeah, so in terms of direct impact, there wouldn't be any direct impact on BRC Asia. But in terms of supply diverging to this part of this world, I think that is very hard to say. We still have to look at how all this play out. We don't even know whether Trump will implement the tariff in the end itself. Yeah, so regarding the steel prices, whether it will go lower from this point onwards. Yeah, just to comment on that, steel prices is greatly affected by the China's property sector. Yeah, so if we are looking at the news itself, the China property sector is still very weak now because the consumers still don't really have confidence in the China's property sector. So we do have to keep a lookout on the property sector. So if the government suddenly pump in a lot of stimulus to consumers itself and consumers have more confidence in the property sector, then this will push the steel prices up. Yeah, hope that gives some insights. Yeah, I think that's all from me. Thanks.
Thanks, Pan. Let me run through some questions. Any idea what percentage of products in the drone business? Yeah, so for a drone business, roughly about 50% of the lifestyle or rather of the revenue is from there. Because just to reiterate that most of the lifestyle business contributes to revenue and the Gem Life contributes as a one line item as share associates because they own Thakral owns 31%. So if you look at revenue, the drone business contributes about 50% of revenue. Confirming Thakral market cap is 200. Confirming Thakral's market cap is 200 million. Yeah, is around there. 200 million is a small cap company. Thakral has already gone up 100%. Is there more downside risk now? What's the timeline you're looking at? Yeah, so for our timeline, we're looking at 1 year. Yeah, so the recent spike is as you all know, it's just because of the so-called the news leak that Gem Life is going to IPO at 2 billion. That they're looking at IPO at a valuation of EV of 2 billion. So yeah, that was the reason why basically the share price ran up because of the leak, but then again, nothing is finalized yet, so we'll wait for more news on that, on the GemLife IPO. Hi, what is the competitive advantage of Thakral since they are subject to unhedged FX IR, interest rate and price risk? L'Oreal can amend their prices subject to market conditions, hence compress their margins. Yeah, so you're right. But actually for Thakral, they are so diversified. So even if something like that happens and the margins are compressed, they have other business segments that are growing, and the higher, like perhaps some of the like Skylark has a or Bark Skytech has a high margin. So if contribution from there increases, then the overall margin for Thakral will also increase. Yeah, so because they're so diversified, they have a lot of product mix, so their margins will swing from quite it's quite volatile per se. So like for instance, because of the setting up cost for Nespresso, their operations margins or net profit margin will likely be slightly lower. Gross margins as well because of the setting up cost of Nespresso in over the next 2 years, but it will likely increase again after the setting up, or once the business has stabilized or has normalized. Yeah, so that is but then again, what's the competitive advantage again? I'll say is GemLife. So GemLife has been performing really strong, and we've seen the growth in homes, like 300 on average per year, and over time more site fees. So I think that will be the key driver for Thakral. Do you expect mean reversion on Thakral price since it has gone up significantly by 100%? Yeah, so yeah, it's just that like I mentioned, the news of the potential IPO of GemLife that got leaked, that basically yeah drove the price up. But we think going forward, like I mentioned, based on our valuations, we slap a 50% conglo discount to the the comparables, which are the Australian land lease community peers. And despite that, 50% conglo discount, Thakral's share price is still way above the current 150, which is $2 plus. So we still believe there is some potential upside, and going forward, there is a lot of room for growth for Thakral, especially since a lot of their businesses are just starting up. Like GenLife just started up less about half decade ago, so it's also on a growing trajectory as the adoption for these land lease communities start to increase. Yeah, so and the drone business also scaling up. They are opening more stores in China. Yeah, so there are a lot of growth prospects for them. Paragon privatization, will one be receiving payment if one never take action or acceptance, which seems not available? Yeah, definitely. So basically, since now Paragon has been privatized and is the scheme has been approved already last month, and I believe the share will stop trading in a couple of days' time. You definitely will receive, as there will be Paragon will be delisted. You definitely will receive your fair share of the 98 cents. So even though you never take action, never accept, or never attend the EGM or anything like that, as long as you're a shareholder, you definitely will receive the payment. Yeah. Much of Thakral recent gains seem to be due to GemLife. Is it possible to provide a brief valuation for GemLife? Yeah, so in the news leak also called, yeah, the they're looking at a roughly 2 billion EV enterprise value for GemLife. So that is the initial valuations. Yeah, but as you know, nothing is firmed up yet, nothing is finalized. So yeah, we have to wait for more news on that front. But the initial valuations look at around 2 billion. Any reason to Thakral dividend policy, as I find that the dividend yield is rather disappointing. Yeah, so Thakral over the past couple of years or 2 years or so, they've been paying 4 cents. In 2022, they paid 4 cents or so plus a 0.5 cent special dividend. So going forward, starting this year, their dividends they mentioned will be the higher of 4 cents or 20% of their profit. So based on our estimations and our forecast, we are looking at a roughly 4.8 cents dividends for FY25 based on the higher of 4 cents or the 20% of net profit. Yeah, so that is our forecast, and yeah, that is the new revision to their policy starting FY25. Yeah, I think that's likely all for me. Yep. Maybe it's time for TA or any other one wants to answer questions. Yeah, thanks.
Thanks, Darren. I'll move on to the TA questions. So I'll just share my screen right now. Yeah. So first question is on ST engineering. Yeah, so I think ST engineering is still in a very steady uptrend over here recently, also creating higher highs above this 755 level. So for now, we could still see some, maybe looks like a bit of a consolidation right now, but uptrend is still definitely intact. It could retest this channel's resistance again, which is somewhere closer to about $8 about there. Yeah, so I think the uptrend is still very strong right here for ST engineering. The next one is China's sunshine. And so for this, I think also is also in an uptrend right now. So looks like finding some short-term resistance around this 56.5 cents area, a bit of a pullback. But price is likely to find some support around here. I think around 54 cents as well. So this was along the 20 MA level, which previously was a dip over here and as a rebound. And this was also a consolidation recently. Yeah. And then next support level will be around 52.5 cents. It will be another strong support level, which was the previous resistance breakout level. So overall, I think for now, it looks like be going a bit of a consolidation right now. As price, in terms of price action, we just trading below some of the 10-day moving average, which it has held over here. So also short-term pullback, but overall uptrend is still going strong for this counter. For Singtel, I think we're likely to see some continue a bit of a weakness ahead. So because price was over here, there was a gap up above 390, and afterwards, then the very next day, price there was a profit taking, I think, over here. Then price has remained under this level for the next few days. So some short-term weakness over here. So I think we could still see this weakness continue on to perhaps retest. It could come down towards like 370 if this continues to retest this horizontal support level again. But overall, when you look at the longer term trend, still in the uptrend. So for now, most likely is a consolidation, sideways consolidation for Singtel. Okay, next question is Raffles Medical. Yeah, so for Raffles Medical, also looks like a consolidation right now. So resistance still around above $1 and support likely to come back to test this support 96.5 cents level over here. So expect a bit of just sideways trading to continue on for now. Yeah, so since like this rally over here in end February, then price has just been consolidating in a very big range. So mainly between 90 cents to about $1, but for now it's about 96.5 cents to $1. Okay, the next one, Yang Zhejiang financial. So I think for this, we're likely to see some short-term weakness. Price looks like it's formed a double top around the 76 cents, 77 cents area, and then in terms of the short-term momentum, it broke down this uptrend channel over here, and then also below this 73 cents level where it broke above here previously, and then now it's turned to a bit of resistance. So likely we see some short-term consolidation between 69 cents to 73 cents for Yangtze Financial. The next one is Seatrium. Yeah, so for Seatrium, I think also looks like a consolidation right now. But price, I think we could expect some pullback. Some pullback for now at it's going below this 10 MA level. So previously there was a bit of a bounce along the way over here, and I think there's some weakness we can see the past 2 days. So I think we could see some further pullback towards maybe 196, this previous resistance level. That it might be the next support. Okay, then for next one is oil tech. And so for oil tech, I think for now it's probably in a range consolidation mode. So support is 51 cents, and then 61.5 cents was like the swing high being formed recently, and price looks like just finding some resistance from like around 56 cents level. So I think we're likely to see some consolidation right here. You could retest the 51 cents level again. Okay, OKP is another strong uptrend. So overall, I think the uptrend channel could look like this. So currently, I think after the news, I think over weekend there was a bit of gap up today. Yeah, for potentially a bit of a profit taking, but I think the uptrend will likely still hold. Yeah, if it comes back to close out this gap around or reconnect with the 5-day moving average, we could see some support back again. So that's closer to 73 cents area. Yeah, in terms of resistance, if it retests a potential channel resistance, that could be around close to 81 cents for OKP. Then next one is Centurion, which is also a long-term uptrend. So for Centurion, I think price is just last week, I think there was a break above 135 after this consolidation over here, and just continue to make higher highs. So very steady uptrend over here, and in terms of trend line, we could be finding support from this trend line. So support, if it does retest that again, probably around 137 there. For the moving averages, it's finding support along the 10 MA, so that's around 136 or 137, 138. So yeah. So that will be a strong support. For now, likely to still see the uptrend continue on, I guess. Yeah. Next one, some Hong Kong counter. So some BYD, I think we are seeing some overall for the Hong Kong market, there's weakness ongoing right now. So for BYD, price failed to hold this 410 key level over here, and then coming off under it. So I think most likely we see some further pullback, I think towards the 350 to 360 area over here. So that was like previous horizontal support level. Also, zooming out, this is also a channel support over here. Yeah, so I think given the current weakness, we're likely to see some further pullback for BYD towards this area where it could do a bit of a bounce afterwards. Yeah, and for Xiaomi is a bit stronger than some of the most of the other counters. So it's just I think it looks like a sideways consolidation right now between like 48, around 48.65 to about 53.50 right now. So it looks like just moving sideways. Then for CATL, I guess it's an IPO. So currently we are just seeing weakness after 2 days of strong gains, then it just been weak afterwards, with price remaining below the 5 MA level there. It's likely to be the resistance right now. So that's about 307, 308. Yeah, so I think we're most likely to still see some weakness ongoing right now first for CATL. Some support might come if it does retest close to the 291 level over here, which was like the lows of the first day when it started trading. Okay, then A for the three local banks. So first one, DBS, I think still remain the strongest right now. So last week, nothing much happened, just still sideways. And so as long as it stays holds around the 44.50 level, which was this horizontal resistance, try to break above here, then I think it could still maintain a bit of a strong short-term momentum. Yeah, if you break below that, then we could see price retest close to about 40, close to 44 around there. Yeah. There's some resistance like to be above 44, 45, 40. Yeah, so I think nothing much right now for DBS. Probably still sideways. Then look at the others, UOB is slightly weaker. So it's still trading between 35 to about 36. Yeah. So likely still okay if it can hold 35 over here. If below 35, then it could go towards 34 next. And OCBC also quite similar to UOB, just moving sideways. Resistance above $16.30 and support will likely come in around close to $16. So just sideways consolidation as well. The next one is on sets. So for sets, I think last week still managed to hit the close to a resistance area. Close to 315. Then there was a bit of a pullback afterwards. So I think for now it's still okay as it's still trending along the 10-day moving average, this red line over here, and then there was a retest of this breakout over here at $3.03. So as long as these holds, I think still okay, but I think they could come down a bit because I think price there's also large volume coming off after the earnings over here. Then prices afterwards subsequently like it went up for like 1 day, then afterwards the next 4 days there's some the momentum doesn't look to be there already. So I think we could see some further pullback if it does break below this 303 level as a confirmation. Okay, next one is Samudra Shipping. Samudra Shipping, I think some weakness for now as well. So after price tested the 85 cents resistance, then couldn't hold above this 81.5 cents level, and also trending below some of the short-term moving averages. So likely to see some further pullback towards, but I guess closer to about 78 cents perhaps that will find some support next. The next one is on WeHer. So WeHer also not much going on. I guess it's a bit sideways right now. It's still quite weak as price is still finding resistance along the 10 MA, currently around 42 cents. And then some of the horizontal levels, I was think there's also a lot of resistance at 43 cents right now. Yeah, price is finding sellers over here previously about. Yeah, then I think most likely sideways for now. Support is still around 40.5 cents level. If this doesn't hold, then we could see a further pullback towards 30.5 cents. So I think not much bullish signs for WeHer right now. Next one, Sembcorp Industries, I think still looks like a range consolidation. So overall, still uptrend channel, but just very prolonged consolidation for the whole month, for the whole of May, between 645 to about 745. So I think that will still continue on as long as this 645 level still holds as support. If not, next level will be around close to 624 around there. The next one is for SIA. SIA, I think is still a very smooth wave over here. So since breaking above the 685, continue upside towards 710, some resistance over here previously, but I think it's still just doing a bit of sideways consolidation. So as long as I guess 707 level holds, which is a 10-day moving average, continue hold as support. It could still move higher. Yeah. Then if it doesn't, then it could most likely pull back towards like 697 as the next nearby support. So I think this one just still trend following around the 10 MA. So it's on bounce state. That's all about it. I think overall it's a long-term uptrend, but it tends to form very long sideways consolidation along the way. So looking at previously, there was a bit of a rally recently accompanied with volume. But look at previous times when it happened over here in May last year, there was after it did some consolidation over here, and did a pullback afterwards. So likely over here, I will guess maybe still consolidation likely to take place. So above, it looks like above $1.12, there's still some perhaps profit-taking resistance. So maybe we see some consolidation again. A good support will be around, if it does retest close to 107, which was this breakout level. Okay, the next one is on BRC Asia. BRC Asia, I think very well-defined consolidation over here since end of April. So it's around 310 to 317. So long term is still uptrend in this blue color uptrend channel over here. So above 317, if it does break out above 317 to continue uptrend, the next key resistance somewhere, I think somewhere closer to about 327 inwards. Yeah, but if there's a breakdown below this 310, then we could expect some pullback towards the key $3 psychological level, which is also a resistance level you broke out previously. Yeah, so these are just some of the levels to take note, but for now, still nothing, no signs, just moving sideways. Yeah. And for Hong Leong Asia also long-term uptrend over here. Recently, in terms of short-term wise, it's just moving sideways, nothing much. 115 to about 121 over here. Then 112 is the next support level. Then above that 125 is the next resistance. So I think nothing much to comment, just sideways. Okay, next one is on SIA Engineering. So SIA Engineering, this one also I guess is also smooth trending upwards counter right now. So a bit of resistance at $2.72 after this increase with volume, but I think it's still very strong now. So most likely just consolidation over here, because you see and there's a rally that's high volume. After that, there's a consolidation on lower volume. So that's a very bullish sign. Yeah, so I think overall still very strong. Support most probably coming from this 5 MA for now, which has traded above all this time. So now it's on 268. That will be the current support. If it breaks below that, then it will most likely come at around the 10 MA. That's around 261 over there for now. Yeah. So I think overall still very strong. Most likely we could still see some upside here if it does break above this consolidation above 272. The next key resistance could be around 282, 283. Okay, then there's the T on Penn United. For Penn United, also long-term uptrend as with the construction sector. Then yeah, just some resistance could be coming from this trend line over here now, which has traditionally seen a bit of pullback every time it tested this line around 75 cents monthly. But overall, still I think the uptrend is still quite steady. So it's just probably consolidating between 70 cents to 75 cents right now first. Yeah, so I think also previously we tend to see some prolonged consolidation over here after rally. So like over here and over here as well. So you could be seeing something over here again. Yeah. Okay, next one is China Aviation. Yeah, for China Aviation, I think it's just nothing too much right now. It looks like a bit of a consolidation going on around 81 cents to 84 cents level. Yeah. Then if can break above 84 cents, next key level probably 87 cents, I guess. But for now, looks like still just trading sideways. Why 92? Next one, Thai beverage. Thai beverage, I think is still very weak over here. Yeah, since start of this year, actually very weak. We've seen the previous support and resistance. For example, now 50 cents previous support and resistance. And current support of 45 to 46 cents area over here. Some resistance at 47 cents currently. So we'll still expect this weakness to continue. But yeah, since it's still forming lower highs, and if it break below this 45 cents level, then we could it's possible we could see more weakness going ahead to test maybe somewhere closer to 43 cents. Okay, next one, Digital Core REIT. Okay, for Digital Core REIT, I think also there's some weakness, but it's over time, I think. So like since February last year, just price consolidating sideways, but recently there was a break of these 52s, like 51, 52 cents support level now enter the resistance and lower highs along the way. So currently I'll just expect not much kind of movement. Some support coming from around 48.5 cents, but resistance for now probably around 51 cents. So probably just some sideways movement. Yeah. So a Triple DC REIT for now, it looks like a sideways consolidation. So yeah, generally between $2.12 currently to about $2.22. So I think not much going on right now for Capital DC. Okay, then the question is Simple still a technical buy? For now, Simple, I think we prefer to wait out first, I guess, because yeah, since it's ready to like 63 cents was a double top after the earnings, it was a gap down, and price has just been showing weakness, trending downwards slowly along the short-term moving averages. Also break below 55.5 cents just recently. So most likely there could be some further downside coming. Yeah, towards so next key support area might be around 53 to 54 cents over here. But I think the upside is also quite limited given the current downwards trend, downwards movement after the earnings. Yeah. Yeah, I see some questions on the Hong Kong counters. First one, Tencent. Tencent, I think weakness for now because it actually just broke below this upwards this uptrend channel momentum right now, and also below some of the below the key support level around here, like $510. So most likely we see some further pullback to whereas we test goes to 400, it's 475 to 485, this area over here. Yeah, which was like this also was a resistance previously. Yeah, so in general, I think the Hong Kong market is very weak right now. So expect some further ahead for this content. Yeah, Alibaba also another one. Just finding weakness. Yeah, so this is also finding resistance along the 5 MA currently and lower lows now. So most likely is already back here to the previous resistance area. So these are 100, around 108, 109. So here might have some temporary bounce, but I expect resistance from the recent breakdowns around 115 will likely be the resistance right now. And this one for Baidu also also looks lackluster. Here there was a consolidation around 85 as support, then turn to resistance. Price is trending lower. So currently at the next support level 79 here, there might be some bounce, but expect resistance to come in close to 82, which was the breakdown area, and the moving averages are having some resistance over here. Yeah, below 78, the next key level is around 75 is support. Okay, next one, JD. This one also another one showing weakness. So another test of the support around 125, but this was with lower highs along the way. So I think there could be a threat if it does. It could break below this support level. If it does breach it again, I think. So that could bring that could bring downside towards 112 next. Is the next support. The next one is on AIA. So AIA, one of the stronger counters right now we're seeing from the price action. Price is still holding above this 62.50 break horizontal resistance breakout. So just maintaining the range while the market is not performing so well. The index is not performing so well. So it looks like a consolidation right now between 62.50 around to about 66.50 there. Then 2318, Ping An Insurance. Yeah, Ping An Insurance, also some weakness starting to appear. So previously it was trending along here, along the short-term moving average support around 45.80, but it looks like today there's a fresh breakdown. So we could see some further downside here. I guess the next key support over here, there's some support around 44.50, but I think the next important one is around 42.40 next. Yeah. So most likely some further pullback after the breakdown of this 45.60 level. The next one is on CK Infrastructure. So for CK Infrastructure, I think it's still maintaining better than some of the other counters. So for now, still another test of the downward downtrend resistance line over here around $50.80. So I think for now still looks better, still maintaining this support of higher low at 49.50. So I think you can break again this around $50.80, there could be some upside here. Yeah, towards 52 and followed by around 53 over. Okay, then there's a question on POP Mart as well. Yeah, so for POP Mart, I think overall trend is still very strong over here. Breakout of the consolidation at 198, and then looks to be another just sideways for the time being first. Some resistance at 234. Yeah, and I think price is also trending above, still holding as a 10 MA as a support, which is around 218 over here right now. So you could see some consolidation take place over here. But overall, the longer term uptrend is still intact for POP Mart. Okay, then back to some of the Singapore names, iFast. Yeah, iFast, I think, yeah, since the earnings gap down over here, sell off, still showing some weakness. So there was a bit of a rebound, just moving sideways, but couldn't couldn't move higher afterwards. And yeah, so I think for now it's still holding the support around 636 this level. This must hold for this sideways to continue, but some resistance is 655 right now. So I think not much momentum also. Yeah, so if it breaks below 636, most likely we come back. The stock will come back to like 618 this level. So probably just some sideways right now first. Next one, TJ 大人堂 okay, for this one, not much volume. So just to take note. Currently it's still above 231, but it's quite erratic price movements. You can see some days it just moved down quite a bit and then recover back up. So for now, it's still 231 as a support right now. Maybe some consolidation where resistance around 240, then above that is around 248. About it went through just now. Okay, CIFMAC, this one also bit of lower volume recently. Bit of lower volume. So for now, it looks like since the price is still holding above 78.5 cents, this recover a bit, then also sideways around here 85 cents, a bit of resistance still. So we might still see some continued consolidation. Support now probably around 82.5 cents. Yeah, then if you can hold over here, then if it breaks above 85 cents again, there could be some upside towards 91 cents this level, which was the opening, which was like the highs when it kept down after the earnings February this year. Okay, then next one is capital invest. So CLI looks to be some weakness right now. So it has consolidated over here, but lower highs on the way, breakdown of 251 today. So I think likely to see some further pullback towards the next key support around 242. Yeah. Okay, then there was also a question of Food Empire. Okay, Food Empire for now, overall the uptrend is still very strong. Then looks like it's a range consolidation right now, I guess, between like 170 to 180. Yeah, most likely just moving sideways for now. And then this question is Parkway Life read a technical buy. For now, I guess it's quite close to the support area over here. This is like close to the $4 mark. So this is a confluence of this uptrend channel support in blue, as well as a horizontal support level. So where it's just moving range bound. So yeah, this is near support. The resistance probably around above 425 around there. So yeah, most likely it's a buy around here. Then if it comes back to this area, the range resistance, then it's a sell for Parkway Life REIT. Okay, next one, HST, the Lion OCBC Hang Seng Tech. This one just following on the current weakness in the Hong Kong market right now. So price breakdown of the 84 cents, now is a resistance, then support could be around 79 cents, 80 cents around here. So we could see some temporary bounce, but I think it's limited upside for now still. Yeah, because of the weakness. So if it just bounce, then 82 cents around there will be resistance. So, okay, I'll take two more questions before we close the session. So this one is YYY, which is the chart something related to China, I guess. Also seeing some weakness right now where it just break below 171. Yeah, we could see some further pullback, I guess, towards like 165 around there. Yeah. Okay, then there's a question on SGXTA. Yeah, for SGX, I think overall it's still an uptrend over here. For now, nothing much is happening. It's a range consolidation. So around 1370 is a support, which was at previous resistance here. But some lower highs are forming from this around this 1433. Yeah, so it could be some sign of weakness. If it does break below this support, then we could see maybe it come closer towards around 1325 as the next good support, which will be also a retest of this. Should also be a retest of this channel support level as well. Yeah, so range consolidation, but possible weakness from a bit of lower high. Yeah, if it does break the support again, then we could see some weakness ahead. Okay, so I think that's all from me for the TA. Yeah, sorry, there's still some questions, I guess, regarding to some of the fundamentals. Unfortunately, Paul is not here. So yeah, you can help to post the remaining questions on the our Poems Tree community. Then yeah, we'll let him know and answer over there when he sees it. Yeah, so I think on behalf of my team, I'd just like to thank everyone for attending today's webinar and thanks for all your questions. And also we have also upcoming corporate insight webinars this week as well. So if you are free, feel free to join. Tomorrow we have LHN at noon time. Yeah, so that's the upcoming one. So thanks everyone for your kind attention, and we hope to see you all again next week. Yeah, so thanks everyone.